Welcome everyone. Thanks very much for joining me again. And I'm going to look at gold to start with. I'm going to want you to tell me what you want to see. But you've heard it all before with me in gold, really. So at the risk of repeating myself, and you've probably read my article this week, which I posted free on my website. Well, I also write for Intertrader. But we know that 1086, 1087, 1086 was a big level. We've got a little double bottom pattern there on the monthly chart. So it all looks pretty good for gold at the moment. As you know, I won't need to run through that. But again, I am quite bullish on gold, though, in the short term. I'm not sure whether this is the beginning of a bull run, but it's looking all right to me. We've got this big declining wedge pattern kind of thing going on here. So, yes, we will have to break above this trend line for it to get really interesting on the upside. So, yeah, we're going to have to get through 1160, 1165. But I've got a feeling we're going to do that. So it's all looking quite good. Go to the daily chart. And I'm liking this sort of 1 month bull trend that we've got going on here. Obviously, this big trend line, which you saw in the weekly chart, I put here on the daily chart as well. Very nice, clean trend line going back to the high of the year back in January and joining up the peaks in May. And obviously, then in August, we tested that trend line, came back down. But we seem to be building a nice little uptrend here in the short term, at least. And I think this looks quite good. 1136, 1135 is quite a good support level in the short term. Then we've got this trend line support down here about 1130. I've got a bid in there, 1130, 1129 area. I've got a bid in there, just sitting there, just in case we happen to test that when I'm not in front of my screen, which I think is a decent purchase area. I'm not saying I'm going to even get there, actually. It looks to be quite a decent, strong uptrend. So we'll see what happens. 1148, 1149 is quite strong resistance, and that's held quite nicely this week. Eventually, I think we could push up through there, and then we'll be heading up into this sort of 1155, 1165 area, which is going to be absolutely key. Maybe we'll fail there on the first test. I don't know. It certainly shouldn't be that easy to get through there, but if we do eventually break up, a weekly close above here would be particularly good. A weekly close above 1165 would be particularly good on Friday if that was to happen, but who knows? It's quite a long way to go before we can get back up there. Silver again, we looked at that last week in the webinar, and it does kind of back up. Not quite so convincingly, I have to say, but what I really like about silver, as you probably already know, sorry if I'm repeating myself and you've already read this or heard this from me, but here we go. Get your requests in early, by the way, for the markets that you want me to look at, because we often run out of time. So if I know how many markets I've got to look at, then I can try and gauge it. Okay, so this is the big one for me in silver, the monthly chart, 200-month moving average. We've also got this trend line, which acts as a bit of extra support around the 13.5 level. But so far, we're holding this 200-month moving average perfectly around the $14 area. So I really like this. I think that this is a big support level, and I think there's a real good chance the silver market has bottomed out, just as I do think the gold market's bottomed out. So they're kind of complementing each other there. Not so convincing if you were to look only at the weekly chart. That would actually be telling me to stay short. There's nothing particularly bullish there at all. So this is why you've got to make sure you look at all sorts of different time frames, just to make sure you get the whole puzzle, the whole picture of the puzzle together. Again, the daily chart looks pretty bearish to me. In fact, a very obvious downtrend, no particular bullish candles, not even that oversold. No particular bullish patterns. So really, the only thing that would convince me that to buy silver is that monthly chart. But I think it's so important that I think you've got to be careful if you are still short, despite the fact that the short-term charts still look negative. Okay, here we go. GBP, JPY, GBP, JPY. Start with a longer term chart, as I always do, and you know that is important. Okay, it's been an awfully long time since I looked at this chart, so you're going to have to give me some time to try and figure out what I'm looking at. Okay, we had a right good run in this one. What are we looking at again? Pound versus the yen, isn't it? Okay, right, so strong pound, weak yen, yeah, that makes sense. Sailed up through that 50% level. Actually, that really doesn't look like it's been a factor at all, that 50% level, does it? Hasn't really had any. Oh, well, actually, we're back down testing it, so that's now going to be support in this very nice bull trend. I won't bother to put a trend line on this one. I'll wait for the weekly chart. But yeah, The trend is obvious, and you can see how that 200-month moving average worked really nice there as well. Once we broke above it, perfect as support, and then we've taken off from there. So we're now going to have to look and see if we can hold above the 183.80 level, which is that 50% fib, and it looks like we are. Well, we're testing it, aren't we, as I speak? I don't think I can see an awful lot else from there. Right, let's go on to the shorter term and just look at that run up since 2011. These are some old trend lines. You can see how long ago it was I looked at this market. Take that one off as well, I think. Okay, so let's look at the last leg up in this started 2012. Okay, yes, this is the real bull market, isn't it? From 2012. So let's see if I can stick some trend lines on this. Okay, that's probably the most important trend line on the chart. Not sure if I'm happy with that one. Not really. I think that's the truer trend line, isn't it? Yeah, I'd say that's the truer trend line. Okay, so these are the trend lines that we're looking at. Obviously, the break below here is quite significant, but this trend line coincides with the 55-week moving average, so that's quite interesting. Fibs. Okay, it's coming together quite nicely, actually. Right. We've got quite an important area Fibonacci-wise around the 184. Okay, 184.50, 185.22. Well, 184.50 is more important. We're certainly holding below there now. So we've got this important trend line, which is around the 183.20 area. We're just holding above that, which means, and we've also got that fib at 183.50, wasn't it? So that longer term fib at 183.50. So yeah, below 183.00, this market is going to be in trouble, isn't it? We've already been down to 182.41, in fact. So on the weekly chart, if we saw a weekly close below 183.30, that's going to be a problem. Yeah, it doesn't really look that positive, does it? Well, it's okay if we hold this trend line, but I'd say that's what it all boils down to now. We've got basically 183.50, 183.00 is pretty important at the moment, and unless we get back above at least 184.5, then this is looking quite negative, really. Although it's still just a correction in a bull trend, isn't it? So we don't have to get too worried. But it just wouldn't surprise me if we got a little bit lower. Obviously, below 182 is going to be a problem. You've got a lot of support around this 178, 177.5 area if we were to fall that far, and there's no reason why we can't actually. By then you'll have this 100-week moving average moving up into this big support band here. So, yeah, I wouldn't rule that out. Especially, if we hold below 184.50, break below 180, hold below 183.00, 183.50, 183.00, that 50 cent area, 50 pip area, whatever you want to call it. And below 182 is obviously more negative. Below 182, I would seriously be worried about a move down to this big support zone down here. Let's have a look at the daily chart. Oops. Yeah, getting a bit oversold. No, I was thinking below the 200-day moving average. Yeah, for some reason, this just doesn't... I know we're in a bull trend, so I shouldn't be getting too negative about this, but it's just doesn't feel that strong to me. It doesn't look like it's about to turn around and rally back up. Okay, we have got a decent support down here at 182.85, and we have bounced off there actually. So hang on, this is something to get a bit more positive about. I'm looking for reasons to be positive because longer term this is a bull trend, so it's not something you should be thinking about getting short. And I don't think this is a trend changing sort of pattern. There is a bit of a double top there, I have to say. Okay, I'll summarise by basically you are looking to buy into this market. You know, the uptrend has not been broken, and we have had good support down at 182.80, and that has held. So that's a positive. We're moving back above this big spike down here. Wow, this has been volatile. Okay, that's obviously volatile when the yen strengthened on stock weaknesses, but we've stabilised a little bit. Again, 185.00, 185.50. That's going to be important. You've got 200-day moving average there. So that's really the first barrier to get back up through. We can push up back through there. We can start feeling more positive about that. Yeah, stock market falls does seem to be equal to JP yen strength. The yen certainly does seem to be a safe haven at the moment. I've noticed the dollar weakening when stocks come off and the yen strengthening. It's happened all day today, really. Every time the S&P came off, the dollar got weaker, and the S&P rallied. Then the dollar picked up again. So, and you know, same with the yen. Yen was certainly stronger on stock weakness. So that seems to be a general theme at the moment. Okay, so yeah, I think it is worth buying into longs. Okay, I was looking for some reason to get into this pair, and I think we found it. We're getting a little bit oversold. So yeah, I would think that around that 182.80 area is quite a good buy. Well, it obviously is. It's a stupid thing to say. We can see it is. So we bottomed out at 182.41. So the chart has already reacted to that. And yeah, maybe we can get up to that 180 sort of 185.50 area. That's going to be a real struggle. Maybe if stocks decline again, that'll be as far as we can. Then we'll turn lower. Then we've got something more to worry about, especially with the break below 182.50, 182.40. But for the time being, we can hope for recovery to here. And this will really will be key. You can see that level has been quite important across the 3 different time periods that I was looking at. So I guess that's it, really. Your parameters are sort of 182.5, 185.5. Trade it within that range and look for the break of either, you know, break above or break below that range and trade that range. I think that would be the thing to suggest, but I don't really see this being, well, of course, it depends on stocks, I suppose. If we see dramatic stock market crash, then yeah, then it wouldn't take much at all to push this down to the 178 177.5 area. Okay, those are the big levels going forward, I think. I better move on. Dollar, yes. Yeah, euro dollar. Let's do that one. Okay, euro dollar is holding below 112.90. This is a real big level, 112.80. 112.80.90. I had it on my reports today as a big level. I actually traded that level today, which worked quite well as we couldn't get through it. It's a big level for all sorts of reasons. It's a big level on the monthly chart. It's a big level on the weekly chart as well. No, I'm not going to bother looking at that in too much depth. There's no pattern or anything really going on there. You really have to look at this pair in a very, very short term to try and figure out what's going on with it. And even then, it's quite confusing, actually. Okay, so key is, yeah, the 200-day moving average is kind of key. We're holding below it now, around the 113.00, which ties in with the 112.80.90 area, which I say is quite important. I mean, that's kind of pivotal, if you like. We're holding below that, so as long as we're below that, it's negative. 112.40 is a bit of an area. 112.50, 112.40 is a bit of an area. Nowhere near as important as 112.80.90, I would have to say. And if we get below 112.40, well, yeah, then we're risking testing these lows down here at the 111.55 area. Down at 111.15 is good support. You've got that's a 50% fib. You've got the 100-day moving average, 55-day moving average, so that looks quite a decent area to be buying. But really, you know, I'm getting kind of excited when we broke up through 114.30, broke up through this trend line, broke up through that trend line, broke up through that 23.6% fib. Thought, well, here we go, and of course we spiked up and then just reversed it all. Really, we've given up almost all of those gains. It's really difficult. At the moment, you've got to stay on the positive side of it in a slightly longer term, just because we do have a 1-month bull trend there. So, you know, a break below that would be a problem. That comes in at 112.20. Actually, 112. Looking at the shorter term charts gives it a little bit more accurately. Yeah, 112.25, 112.20. That's probably going to be about the most important. That is the most important support level, really. So watch that whole 112.40, 112.20 area. A break below that's going to be quite negative. and 112.80, 112.90 is quite important on the upside. A push up through there, then I'm going to start feeling quite a bit more positive actually, and we could even get up to that 114.30 area, 114 sort of 20, 114.00, 114.30 area. This little band up here, if you can see it. But there's just quite a lot going on in this chart. I still like this trend line. I know it didn't do anything here particularly, but I still like it, so I've left it on. So you've still got 114.70 up there. There's quite a lot of levels, and it's just a bit messy, really. I'm going to take this one off, actually. It's a little bit messy. Okay, if I was forced to do a trade, well, I have been trading this today, to be fair. I would trade the one sort of 112.30.40 support, 112.80.90 resistance. Trade that range, which has been working quite well. I've traded that range today, as I say, and then look to trade a break below 112.20, trend line support, or buy a break above 113.00, and we could move up quite quickly to sort of 113. 113, yeah, we could get up to 113.60, 113.80 area, possibly on a move above there. But yeah, it's really messy, really not easy. Longer term, I wouldn't have the faintest idea where this is going. I think it will be dominated by stock markets. Stock weakness seems to push the dollar lower and the euro higher, and stock recovery seems to do the reverse, of course, which is exactly what we've seen here. So there you go. Yeah, tricky. Right, dollar yen, also tricky. When is it not tricky, eh? No, just quickly go and have a look at the weekly chart. I know there isn't much on here to tell you, but being the responsible technical analyst that I am, I will show you the longer term chart. Okay, real nice support there, obviously, that 38.2% fib. That worked really nicely last week, and it absolutely was the bottom, and we roared off there when stocks recovered. I hope you read my article when I posted it on Twitter about calling a low in those stock markets, which did work. But to be fair, I did think we'd get a better recovery than we've had. So anyway, 112.00, yes, that is important. Actually, 119.80.70 is the biggest level at the moment for me on the downside. I've traded that level today, and it's worked quite well. We bounced off it perfectly today. Actually, we held there yesterday quite nicely. Then we eventually collapsed through it late in the session. Hit 119.20, 119.25 was my target, below 119.70. So we hit that at least, and then we bounced back up again. The levels are just working beautifully. I'm not going to bore you with all the short-term levels in the dollar yen, but they are absolutely working beautifully. And I've said it before, dollar yen does trade really nice, and technically, I've said it before, maybe the Japanese are just brilliant at their candlesticks, but and they trade it very technically, but it really does work. The bigger levels for me are 120.50 is definitely something you've got to watch for. 119.80.70 is definitely something you've got to watch for. Those are the levels that are probably worth trading in the very short term, at least. We'd need to get well up through 121.00 now, because there's quite a lot of resistance all the way up from 120.50 up to 120.90. So unless we've got up through 121.00, I wouldn't feel positive about this pair particularly. Again, probably going to be dominated by the stock market. Break below 119.70 would retest this week's low at 119.20. Then you've got some support down here around the 118.50 level, which looks quite good to me. Those are the levels worth trading. I would rather be short than long this, unless we're above 121.00. That's all I can say, really. Volatile, and now we're just consolidating after that messy period. So it's always tricky when you've had a real extreme volatility, a period of extreme volatility. Where we had for that week. Then it settles down and the levels are a bit blurred. I always find it a bit messy, and you have to let it settle down before you can start to get a picture again. It seems to be doing that, and as I say, the levels are working really nicely in that one. Okay, we'll move on to GBP Aussie Dollar. Wow. GBP Aussie Dollar. Definitely haven't had a look at that one for a long time. Let's see what it says. Simon, this is one of yours, isn't it? You love a bit of GBP Aussie Dollar. Right. Wow. That's quite interesting. My pleasure. Hope that helped. Right. Okay. Oh, this is a good chart. I like this one. This is telling me lots. Okay. So we've had a real good run up. We've hit the 50% fib. We've tried to spike through the 200-month moving average. You can see what happened there. Rejected it big time. So that's quite interesting. That's all we can really take away from that chart without. I will dissect it in the short term, but potential top here for the pound versus the Aussie. We've hit strong resistance and we've rejected it in a major way through August. Wow. And look at that weekly candle. That is definitely not particularly positive. So, yeah, we've hit some important resistance and we've really backed off heavily from there. That's what we can say so far. Quite a good chart, this. No, don't like that one. No, nothing on the upside there, really. Okay, so nice bull trend nonetheless, but that is a big warning. That is one heck of a warning. To spike up and close down on the week is one heck of a warning, especially when you bear in mind that we'd hit such important resistance levels. So someone out there was paying attention to their chart, that's for sure. But longer term, still bullish. So at the moment, we're only in a potentially corrective phase, but even this week, we're still pushing up again. So it's definitely not worth fighting the bulls just yet. Just be aware that we are tackling some major resistance areas, which could be a problem. That's not very helpful, is it? There we go. Okay. Looks like the last time I looked at this one was back at the beginning of July. So. I'm just going to take it from beginning of May. Just going to look at the last 4 months, try and get some idea of it in a short term. Actually doesn't look too bad, does it, on the daily chart? Obviously, those big resistance levels had an effect, so we've seen some profit taking. But look, the profit taking took us back down to sort of these July peaks, the July and early August peak, and we pretty much held there actually, especially when you look at the sort of open closes, which were around 214.30. We got down to, where did we get down to? Okay, 214-ish. So that, price-wise, that kind of support area down there has pretty much done its job, hasn't it? We got a little bit below the. There you go. There's a line in there just to show you how you see the wicks spiked above it, but the bodies of the candles are all around that 214.00 area. So that's acted as good support, even though we broke the 23.6% fib. I think those fibs do look quite accurate. They are in the right place. Anyway, we've had a good bounce off there. So it's all good. We're all happy. The bulls are happy. They're all still in control. Just a correction. Nothing to worry about. That's not the best trend line in the world. So we'll just take this one. This is what's going to be key now. If we have another little dip back, you can see that's going to coincide the 114.00 area. So, yeah, I mean, it looks all right. The question is now, can we get back up through this sort of 221.14 here, and can we retest this high? And if we have another spike up with a quick pullback, then that's going to tell you something is a bit more of a problem for us in this market. I think we need to retest that high just to get a clearer picture of where we're going. If we could get quite close, it all depends on what reaction we get up there. If we start hovering under there for quite a while, then eventually we'll probably manage to push up through it. But if we see another one of these pushes up and a spike back, that's going to tell you that's potential double top and important resistance in a very overbought market in the longer term, and then you'd be looking for something perhaps more a bit steeper in terms of a correction, quite possibly down to this sort of 210.65 area down here. By the time we get there, of course, that moving average will be a little bit higher, but that looks like fairly decent support anyway. Yeah, could probably put another little trend line here actually. That's not particularly important. I'll take that off. So yeah, it's all. I wouldn't be surprised to see us retest those highs, and then what happens there will obviously be important. Break above it, happy days. The bulls will continue. You know, it's the most important thing here is we are in an extremely strong bull trend. So at the moment, any move to the downside is purely corrective, just as you saw here. And eyeballing that support level is it's obvious why we bounced off there, and wouldn't be surprised at all to see us push back. We're a little bit overbought in the short term, but I wouldn't get too pessimistic about that. Holding above 216.80 would be useful. That's a fairly decent short-term support level. 216.90, 216.80. Stick that one down. That's worth keeping an eye on. Otherwise, there's a risk that we drift back down to this 214 area. But that is a good support level as well. Other than that, it's just a question of can we push back up here, which I think we probably can. So yeah, stick with the bulls. Look to buy into weakness unless we break below 214.00. That's going to be a bit of a problem, and we could sink quite quickly down to that sort of 211, 210 area. That's a summary of what I can see from that. Obviously, if we do push up through, let's just have a quick look. I wouldn't be getting short, that's for sure. Not yet, even despite those pretty negative candles, I wouldn't be getting short. Oh yeah, we've got this 200-month moving average coming in at 219.90, so a push up through there would be useful. And then you've got 22. Well, you've got the high up there, haven't you? So that's the one to watch. Weekly close above there would be good. Can't talk about a monthly close above there because it's only the beginning of the month. Okay, I hope that helps. New Zealand, sure. GBP NZD. It's pretty dull to be fair today. There's most of the moves, it seems, came in this morning, very early in the morning. I do my reports at 1 in the morning UK time because I live in Thailand. So it's a good time to trade, you know. Through the night, there's often some real nice moves, and I'm often by the time Europe opens, you can bag some money. But anyway, I'm sure you don't want to be getting up in the middle of the night just to trade. Right, pound versus the Kiwi. Looks pretty good on this chart. Nice break up through important resistance here. We sailed through that quite nicely. So that's pretty good. The 100-month moving average and the 23%, 0.6% fib. We're heading up to this 25, 250, 30, 40 area. That's obvious from price action here. You can see. So that's going to be the next target. All looks okay from the monthly chart. A correction in a bear trend. Start of the bull run, actually. Okay. Weekly chart. We've also got a big pullback there, but I wouldn't get too worried about that. That looks all right to me. We are very overbought, so we seem to be easing back there, but there's nothing in this pattern that particularly tells me. This is a bit of a worry, this spike. It's very similar to that pound versus the Aussie, wasn't it? Not quite as aggressive, to be fair. But again, I wouldn't pay too much attention to that yet. We seem to be pushing higher this week anyway, so it's a warning shot. As we approach some resistance, but hang on, how close are we to that resistance? Not close enough, and that monthly candle certainly isn't negative. So yeah, oops, what have I done there? So yeah, okay, that there is a warning shot in that weekly candle, but I don't think it's anything to get too worried about. Bit of blue red there. Okay, yeah, I wouldn't be selling this one yet, that's for sure. Okay, again, haven't looked at this one for a couple of months. Yeah, these are just corrective moves on the daily chart. So again, wouldn't worry too much. It's struggled. Well, you know, this is just typical of a bull trend consolidation phase for a month and then a push higher. We've come back to test that sort of consolidation area, but I wouldn't be getting too negative about this one right now. What can we do trend-wise? Oops, not that. You can see this sort of bull flag really type thing. Well, as long as we hold above this trend line, that's useful. That's slightly confusing. I guess that's all stock market volatility built into that. So that break back down in there was confusing, but we seem to have pushed back up over the last couple of days, and at least this week we're holding above this trend line. So that's positive. 240.25. Yeah, it looks all right to me. I wouldn't be wanting to sell into this, sure. I'd definitely be looking for buying opportunities. There's nothing negative at all that I can see in this. There's no negative patterns, no particularly negative candles. We're in a nice strong bull trend. Yeah, there's no reason to argue with the bulls. What else can I say? Buy into weakness. A break below this lower trend line would be a problem. I've got that around the 235.00 area. So yeah, we start breaking below 235.00, then it's going to be a problem. Let's actually just have a look at some fibs, get a perspective on those. See if they tie in with those support levels. Not really, a little bit lower than that. But yeah, you can see how this fib ties in quite nicely with the price action though. So those are the big levels on the downside. 235.00, 233.25-ish area. But yeah, it looks all right. Are you positive restock generally? Is this okay? We'll go on to stocks in a minute. I better crack on and we'll better look at some stocks because they are obviously the focus. Swiss dollar Swiss. US dollar CHF, if that's what we're looking for. And then we'll finish up on some stocks. Ugh, yeah, I don't really like the Swiss. It doesn't do much. Okay, that's not telling me anything at all. Okay, we are in a negative trend on the monthly chart, that's for sure. We've got this big spike up, so this is almost double bottom pattern. But, you know, if you take out that one monthly candle here where we had some, oh yeah, we all remember what that was. That was when the peg was removed. Didn't realise it recovered so much, actually. I'm pretty sure that was when the peg was removed, was it? Anyway, whatever. This is not really telling me anything. I just cannot get excited about that. I am sorry. Weekly chart. This is just irritating, really, because if it wasn't for that, we really haven't done anything for 2 years. So that's telling me nothing. Oh, this is just a mess, isn't it? If you're trading this, good luck to you. You know, I could try and make something up, but honestly, this is just not inspiring me in any way at all. I'm sorry to say, it's just a nothing. You know, if I was looking short term, I could probably pick out a bunch of levels and some trading areas for you to get cracking on in the short term, but I'm not going to bother to do that today. Sorry, wish I could help you more, really do, but you know. The grand scale of things, we've just gone sideways, and you know I can't decipher a pattern. Sorry. Sometimes I'm just lost for words, and when there's no point in me trying to make something out of nothing. So I'm totally lost. Maybe someone else has got a better idea. I mean, you got these highs up here, 95.45. Yeah, they look kind of good. That ties it. The 200-day moving average is having an effect, isn't it? You know, that's acting as quite decent support and resistance. Okay, so that's definitely worth keeping an eye on. The 100-day, not so much. Yeah, listen, sorry. If I can't make something up, then I better just move on. Apologies for that. But some markets just don't talk to me. Okay, so E-mini S&P, my FET, what's that mean? Stocks. Let's go on to stocks. Oh, not spicy and Thai. Brilliant. I didn't know that. Nice one. Thanks, mate. Seeing as I live here, I should know that, shouldn't I? Nitnoy. Brilliant. Yeah, I'm going to have to cite. Do you do Thai webinars so I can learn from you? Right. That isn't particularly important, the weekly chart in the E-mini S&P. Actually, the E-mini S&P is not the one that's been helpful at all. None of these charts are particularly good. So, in fact, I'm not even going to bother to show the E-mini S&P. Normally I love this market, and I just think the levels work beautifully. It's one of the popular subscriptions that we have, and it just works well. But right now it's tricky. I have traded it today, and I have made some money. That 1936, 1938 level is something that you really want to keep an eye on. At the moment, we're basically in some sort of triangle pattern over the last 2 weeks. Yeah, I don't really know where it's going. Other stock markets had looked more positive, although this week I'm not so sure. Anyway, not the greatest recovery in the world here, and it's clear that bears are in control. These moving averages do speak volumes, really. You've got some dead cross moving average crossovers, which are very negative. You can see 55-day crossing the 100 and 200. The 100 and 200 are heading down. In a couple of weeks, it looks like the 100 will cross below the 200 unless we get some very strong recovery, which you can't rule out. You know, I'm seeing lots of bullish fundamental talk. I think, you know, people are trying to talk the market up, but it's just not working at the moment. So which time frame do you normally first consider to buy, sell? Okay, well, I'm a day trader, so I'm in and out within a few hours, and I don't like to run anything overnight. So, you know, if I've run a position for 3 hours, that's quite a long time for me, and I start to get a bit twitchy. I'm not very good at putting positions on and walking away and just leaving them. Sometimes that works very well. Sometimes I wish I'd gone off and had a long lunch. With some my pet, what's chicken in Thai? Can't remember now. My pet guy. Anyway, okay, so this is, not about, well, we didn't do too badly, did we? We got close to 61.8, and then we've crapped out again. 1900, 1895, yeah, that's holding quite nicely here. You know, these fib levels are sort of reliable, but not really. Okay, if the levels to watch are definitely the 1900, 1895, 1935, 1938. Above there, 1965, 70, and then 2000. Those are the levels that I'm sort of trading in the mini S&P. But direction-wise, finding it tricky. Other markets don't look too bad. US markets in particular. Let me show you the Nasdaq. So yeah, I'm very short term. The good thing is at the moment, trading short term, you know, before this stock market turmoil, if you'd nicked 5 points out of the S&P, you'd had a good trade. The trouble is you were really looking at a 5-point stop as well. So your risk reward wasn't fantastic. It was pretty much 1-to-1, and that was the best you could get. So at least with this volatility, you know, you could be looking to risk 5 points to make 10 points, which is a bit more what we're in the game for, isn't it? Right. Okay, so do I need to show you the weekly chart? Not really. No, the monthly chart rather. But the weekly chart is quite important in the Nasdaq. This one has been a bit stronger than the certainly than the Dow Jones and even the S&P. But look, this is quite a good candle here, a bullish candle. So I got quite excited about this. Spiked down to the 100-month moving average, held the long-term trend line going back to 2012. As you got, excuse me, a long-term trend line. Big bounce off there, so and quite a positive candle, but we just couldn't get through this congested area up here. You see, with the trend lines and everything else, we've turned around and gone south again. Not particularly negative, but we could be developing a bear trend here. That is the problem, and the failure to get through here is definitely a problem. You can see all the congestion from a couple of intersecting trend lines and a moving average. So right now, not that positive. Holding above 4,200 would be helpful, although as I speak, we're just edging below that again. So it's a bit of a mixed picture. What would I right now in the short term? I'd focus on the fact that we failed to get through that congested area, and we're developing a bear trend. Yes, we've held there. Wouldn't take much. So having got quite optimistic that we were going to get a good recovery, and we did, now I'm starting to feel less positive. If you read my free articles, you'll know that I did call a low. As soon as that bottom was in, almost the day after, I said, let me see, we got the low on the 24th. I think I wrote something on like the 25th or the 26th and said, that's it, we're going up. Might have been just before this big blue candle here. So that's it, you know, I called a low. And I was looking for us to get up to here, but we didn't quite make it. I was looking for us to get to the 43, 80, 90 area. And, of course, we topped out just a little bit below there. And yeah, it doesn't look too good now, does it? Again, moving average crossovers negative. We are developing what looks like a bear trend. So the panic's over. The volatility's still there. It just doesn't look that good to me. So yeah, I'm not feeling as positive as I was or around the 26th. A week later, I'm not. Dow Jones. How many trades you take on average a day? I don't know, 3 or 4. But often, because I'm in Thailand, it's now lunchtime in the UK and it's 7:45 here, and I'm, not going to be trading through the night. If I do 3 or 4 trades and make a few quid, then I'm happy. I don't want to be running stuff overnight. I used to run stuff overnight. I used to be an options trader on the live floor. You've always got a position. Admittedly, the market was only open from 8 till 4. So in the old days, back in the 90s, you did kind of sleep, although you would wake up and see what happened overnight. But on holidays and stuff, I'm just used to being on holiday always with a position, and I'm too old for that now. So I like to get in, get out, and get away from it all. Dow Jones and running positions overnight just means I wake up and check my, now that everything's 24 hours, it just means I'm checking markets all the time. If you can't make money during the 12 hours that you're awake, then what's the point trying to make money in the 10 hours or 8 hours that you're asleep? Dow Jones, again, similar sort of thing. 100-week moving average in this trend line held perfectly, almost perfectly, and we bounced up. Very similar, isn't it? Looking to that is a Nasdaq. That's why. There we go. Let's try the Dow Jones. For some reason, I didn't switch over on the weekly chart. Come on, quickly. I'm running out of time. Okay, so yeah, that was it. 200-week moving average, beautiful. Bang, off there. Nice blue candle, but no follow through. So yeah, again, bit of a worry. We're just holding this trend line support. It's just a little bit messy. Not as clear as it should be, and we definitely, okay, yes, this the level's actually been working quite well in the Dow. I don't know if any of you get my Dow reports, but they are working quite well. But direction-wise, I'm a bit lost right now. I wouldn't want to be. I'm selling into rallies with these stock markets. They don't. That's what's working for me at the moment, anyway. DAX. Well, I'll finish up on the DAX. It looks like I'm going to have to end in a minute. But if you want another market, to have a look at another market, shout it out quickly and I'll try and squeeze it in before I have to end. But we've only got a couple of minutes left, I think. Come on. Yeah, again, we don't need to look at the monthly chart. We can just look at the weekly chart. Oh, God, that's the DAX. That's not the DAX, that's the Dow Jones again. What's wrong with this system? Okay, yeah, we had really good trendline support here. That worked at least. Yeah, we're just not holding above the 100-month moving average. We just below this trend line. It's just not as positive as you would want. I'm used to seeing over the past few years bull market corrections, and then bang, before you know what, we're off to the races again. And it wasn't too hard to pick bottoms in those times. I did that quite a few times. I'm supposed to do that. That's what people pay me for. So, but this time we're just not getting that bounce back that we would expect in a bull market. And this really is very much a negative trend in the DAX. There's no question that we are in a 5-month bear trend. So, you can't really fight it. Moving averages are telling us, 155-day moving averages are clearly telling us that we're in a bear market. So it won't be long before we cross over the 200-day moving average, but at least with a 55, that's going to be negative. So, yeah, just not really that positive, really. We seem to be stabilising after that shock crash, but I would be more worried about the downside right now. That's all I can say at the moment. Again, DAX levels haven't been working too badly at all. But it looks fairly peaceful out there at the moment. We've got Labour Day, haven't we? We've just had the UK bank holiday. We've got Labour Day Monday, so it's probably a reason why this week isn't that busy. I doubt anyone's going to be crazy about putting on some big trades. And you can see we kind of got a couple of dojis going on in the last 2 days here, and there wasn't much going on in the 3 days before that either in the DAX. So, yeah, I'm not really getting any bigger clues, but I'm not feeling too positive about it, let's say. I'm not feeling that this is bull market corrections followed by a nice big recovery. It's just not happening. And I've seen people trying to talk this market up and say it's just not happening. Gold and silver we've done. Crude oil, I'm going to finish off with. It's worth a note. This worked nicely, and I hope someone here is a subscriber to the oil report. But if not, I'm kicking myself actually because I didn't trade this even though I called it. I was focused on something else. Okay, so really nice one, this one. To be fair, I didn't catch the bottom on this. There was nothing telling me that it was going to go, but we were just so oversold. Eventually, we had to have this huge squeeze. I'd said it a couple of times in my report. Anyway, we did. We had an enormous squeeze. What was it, 10% or more? No, 20% was it? Anyway, whatever. Yeah, it looks like 20% or more. But you can see we had a lot of resistance here from trend lines, moving averages, Fibonacci's and everything else. And I said that is probably going to be the top of that bounce. And then we collapsed. And guess what? I didn't trade it. So kicking myself a little bit. But you can see the bears remain in control of this, really. This is not a bottoming pattern. This is just a real big bounce that was definitely required. Look how quickly that oversold stochastic turned to overbought and we've turned lower again. So I'm not positive on oil at the moment. I'm going to have to see something a lot more convincing to tell me that a bottom is in. And if we get below 43.00, then who knows, we could be back around the $38 area. So there you go. Yeah, not much else to add on that one. And I think it's nearly 10 to, so I think we're probably done, unless you'd like me to look at anything else or ask me any questions about what I've said. Otherwise, I'm going to show you what I always do, show you my website. In case you haven't seen it. Datatrade.co.uk, you've probably seen it already. You can actually, let me just tell you, if you don't subscribe and you want to follow what we do, I don't know if you know this, but you can easily see a lot of previous reports. So you can go through them. If you're interested in what we do, what we say, for example, gold, you just click on the gold icon and it brings you up. Scroll down. You can just select dates. You can go back over all the old reports and you can see what we wrote. There's actually a report's come up here for, when is it now? 26th of August. Okay, so they're about a week old and you can go back further than that and you can see what we wrote. You can see the recap at the top, just going over what I'd said the day before. I usually say gold, we wrote this, and then I recap on what the market actually did compared to what I wrote and what signals I gave. And then you get a chart, trends, and everything else. And then you can just keep going back over if you want to check the accuracy of what we do. Why is that drop down not working? Okay. Okay. I better get that checked out. Good thing I did that. Anyway, you can go back over our reports and see what we said for a week or so ago, or more. Oh, there we go. It does work. So there you go. You can see you can go back at least a week and check all of the week's reports. Someone's asking me that I would place trades for people. I'm kind of doing that, but I'm not really opening up to the public. It would get too messy, and I'm not really allowed to advertise a non-regulated fund. So I'm doing it for friends and family. We have got a very low risk strategy, which does work really very well on compounding, but I'm really sorry I can't open that up to the public because I think it would be against regulations and I don't want to get locked up. I'm going to try eventually to find the time to do a live trading group, which would basically mean you could follow my trades yourselves, put them on yourselves. But I've got so much going on at the moment and I haven't really got the time for it. I was planning on doing that in September, but keep an eye on my Twitter feed. I'm sure you know what that is. Oops. Hang on. And you will get information on that. as and when I find the time to do it. But right now, I'm just getting back into trading because I didn't trade over the summer. So it'll be about £300 a month. It won't be cheap, but if you want to pay something cheap, there's plenty of places out there where you can do stuff for 50, 100 quid a month, and they'll give you trade signals. I charge more. There's a reason that I charge more, because I'm not Mickey Mouse. Not that they are, but anyway, this is so follow me on Twitter, Day Trade Signals, if you're not already following me, and I throw out sometimes some free signals on there, but I will definitely be updating people if and when I do have this live trading group going on. It'll be probably on a private Twitter account, so it should be fairly easy for you to follow. And that's it. Okay. Oh, I will just show you my mentoring course. And if you're interested, I'm thinking about doing a discount because I've had to move it because I was going to do it this weekend, but there's not enough people. People can't make it because kids are still going back to school and stuff. So I'm going to make it towards the end of September, and I'm thinking about offering a discount actually. So I'll also announce that on Twitter, but if you keep an eye on this page, I'll teach you absolutely everything I've learned in 30 years of being a trader and an analyst in this program. Okay, yeah, we had it for September 5th and 6th, but that's going to be moved back 2 weeks. It's about 4 to 5 hours each day on a Saturday and a Sunday, but believe me, I will teach you everything that I know. And the last one went down really, really well. You can read all the reviews there, so it's something worth looking at. And I'm thinking about doing a 20% discount, so keep an eye out, or if you are interested, email me, and I will let you know if we do a discount on that, and you can be one of the first to sign up, because obviously the places would be limited. I think I'm supposed to end now because it's 10:02. So unless you've got another market you want me to look at, I'll leave it at that. Thanks very much, guys. Thanks for joining me.